The following is a presentation of TFNN. The Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
Alrighty, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN. Coming to you live on Tiger TV at TFNN.com, on your mobile platform at TFNN.mobi, and live inside the e-Signal platform. Let's check out where the markets are at right now. We got the S&P is currently up. Moving up right now, 19 points. We got the Russell is currently up 6 points on the day. And the Dow is up 130 points on the day. So getting some nice moves right there. NASDAQ also moving on up with everybody else, up 54 points right now. Starting to get some negative ticks, so we may start seeing that start pulling on back down right now. Starting to see some negative tick volume on the indices. But they had a nice run. Let's go on over and look at our metals. We got gold and silver both in negative territory. Gold right now is down about 12.5 points, and silver's down 0.063. We got oil and natural gas mixed bag right now. Oil is in positive territory. It is up barely, just up 6 cents on the day. And we got natural gas is down 0.06. Copper is, it is up against the other metals right now. Not a precious metal there, but up 0.089. Going into our bonds. Bonds are in negative territory right now. They're down slightly, down 0.12. We got the dollar index is up 0.502. Dollar index really strong this morning. Checking out our ag markets. We got ags mixed. Corn is negative. Soybeans is positive. We got corn right now is down just slightly, just down a few ticks. And soybeans is up over 8 points. Checking out our FX pairs and where the Forex markets are at globally right now. We got euro dollar is currently down 80 pips. Euro yen down 109 pips. We got the euro pound down 42. Pound dollar is currently up 23 pips. Pound yen is down 31. And the dollar yen is down 4 pips on the day. Aussie yen right now is up 41 pips. Aussie dollar is up 36. And the dollar franc is up 54, with dollar CAD down 27 pips on the day. And that gets you your current lunchtime market wrap. As far as today's headlines, let's go and see what's sort of taking up the headlines for the day. Looking on over, U.S. job sector gains, Midwest manufacturing stumbles. So we got the private sector gain was the highest since June on the ADP report. Chicago continuing to have falling and numbers, the lowest numbers since May. And Midwest manufacturing weakest since 2009. So again, the ADP report, positive, but overall, quite a few the reports that came out were not so positive on the day, but that wasn't enough to hold the markets back. And as we already discussed, the indices have been in positive territory, and but they are starting to push on back down. And that was one of the biggest headlines of the day. We got the Dow based on where it's closing right now. We're going into the end of the third quarter here, and it's going to have a 3/4 losing streak, just barely up. So I mean, if it moves on down just a little bit, then. So let's see here. Third straight quarterly loss for the first time since a 6-quarter losing streak that ended in the first quarter of 2009 with the end of the Great Recession. So we got 3 of 6. If that keeps going, then it's going to start looking more like 2008. But we'll see where it ends up and what happens. It's really trying to move on up, but it's still pretty far down overall. Let's see here, sort of just some fun facts for you. So we talked about last time, it had 6-quarter losing streak right there at the end of 2009, where they did the massive bailout. Before that, the last time the blue chip barometer declined for at least 3 straight quarters was in a 5-quarter stretch, ending in the first quarter of 1978. and according to the FactSet data, and the Dow's 119-year history. So pretty nice streak there for it. 119-year history. The current streak would become just the 20th quarterly losing streak, lasting at least 3 quarters. So, there's 80, 90. I mean, basically, 89 or 99 actually that have years that haven't had that, but looks like we got 20th, and we are pushing on it right now. The longest quarter losing streak is 6 quarters again. Seen first during the second quarter of 1970 and matched again in the first quarter of 2009. The Dow was up 209 points, of course, this morning in trading, but it's back down now. It's only up 125. And it's look like it's going to move on back down. So it's down 8.8% as of this morning. And looks like, right now we'll still, we'll be a little higher than that probably, but looks like we are going to go into a 3-quarter losing streak on the Dow. Europe, on the other hand, shows some rebounds at the end of the worst quarter in 4 years. Stocks rebounded up, but again, they faced their worst quarter since late 2011. The FTSE's been down 10% so far this quarter, and a couple other, car makers were boosted by China tax cuts on small cars and things like that. But it's had a rough time. We talked about copper going sort of against the precious metals. And it's in negative territory last time I checked. No, it's positive, actually. Sorry about that. Yeah, there's the one positive. The precious metals were negative. And 1 week high as investors close out a bunch of bearish positions, getting a little bit of a squeeze right there. So basically, it's the Chinese incentives on making smaller cars. Of course, more copper needs to be purchased, and that gives it a little bit of a boost. Chinese market shut for a week of holidays. So that'll be interesting, especially after all the movement they've been causing in the markets over the last couple months. They're just going to close down and take a break for a week. And LME copper stocks seeing that nearly 30,000 T-Fresh cancellations. Okay. Well, I don't know what that means. I guess I could dive into it, but anyways, feel free to check that out. That is one of the top stories right there on Reuters today. Going on over looking at gold. Gold right now is actually heading for its biggest quarterly loss in a year, moving on down, down, down. And as the Fed delays, but still hints at the possibility of raising interest rates, making the dollar more valuable, therefore taking less dollars to buy gold. And so, of course, everything is focusing on that. Platinum heading for the worst quarter in 7 years. And so, anyway, it's just, interesting to see all these highs and lows happening. Gasoline supplies up 3.3 million barrels. So 3.3 million barrels. We go over, we look at the release that came out this morning on crude oil inventories. And I'll zoom in once we get over there for you. And we can see U.S. commercial grade inventories came out this morning, increased by 4 million barrels from previous week. Expectation was a increase of, right over here, a decline, actually. We expect them to go down. They keep going up by 4 million barrels. And again, at 457 million barrels, U.S. crude oil inventories remain near levels not seen for the last 80 years. And I don't know about you, but I'm seeing like $1.70, $1.80, $1.90 gasoline, and which is really great for traveling around the rodeos. Makes it a lot cheaper, hauling those horses everywhere. But not great for the oil industry as a whole. I know that's been really rough here on a lot of families here in Texas and other places that have relied on oil, but it's been going down so low that it hasn't been. They've obviously had a lot of layoffs because it hasn't been worth going in and drilling for all of it. Let's see here. What else we got? U.S. dollar, like we talked about, the dollar index is positive right now. It's pushing on higher. And U.S. dollar index over here pushing higher near 96.30. And we got it busting above 96.30 here already today. And just keep going and going and going. Boot up by the data inflows. And, that's major level right there, and it keeps going. And then we got a new one. Senate approves legislation to avoid government shutdown. And I don't think there was a lot of worry on this round. And 78-20. So we keep the government funded till December 11th. And that's always fun. It's almost just like, okay, yeah, whatever. And a lot of the people are just tired of hearing it. So anyways, but they're trying to avoid their government shutdowns of their consistent things. And that is very loud. Okay, sorry about that. And I don't know if that came through on your side. But anyway, so Senate approved to avoid a government shutdown. Obviously, that's a big boost for confidence in the market because it's one less factor that they have to worry about when they're trying to make decisions. Markets like certainty, or they like nothing, but they do not like uncertainty. And that's if you're a bull. So now if you're a bear, I like the uncertainty because I like the volatility. So, but because I don't really try to read what's happening, I just try to follow the charts, and I know the charts move around a whole lot more when people are worried about what's going to happen. So it's sort of weird, I know, but that's trading. All right, well, that gives us our top headlines for the day and wraps those up. So let's go on in and check out what else we got. We can check out a few reviews. We can dive into some of these charts. We were talking about, the Dow. We're talking about gold, copper, oil, dollar index. And so I'll start pulling some of those up over here on the side. And as they load up, we'll dive into them. Let's see here. So let me get this going. All right, we got dollar index. Let me see if I got that one. There we go. And so I'm going to set a few charts over here on the side so we can dive into some of these for you. And I'm going to go in. I'm going to choose gold. We'll check out the newest gold charts. We'll go in and we will check out some of the latest to see that. So I'll give us gold right there. And it's almost loaded up for me. It can take a minute to try to get a few of these going. And what we'll do is we'll do some segments where we'll go in, and I'm probably going to get these all working for me in the background so that way we can then pull them up and dive into each one of them here in the next segment. All right, so while that's loading up, the next thing we can dive into, some general updates and looking at a few things. And what's going on this week so far, today, tonight, tomorrow, the rest of the week. We're going to hop into the news plan, make sure we wrap that up. I like to get that done every Wednesday for you, so that way you got your plan for the rest of the week. So we'll do that when we come back, and we'll also check out some charts. Maybe we'll find some trades. Stay right there. We'll be back.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Alrighty, folks, welcome back here to the Diagnostic Trading Hour. Let's go ahead and get our news caught up. So you got your news trading plan of what's coming up, and then we'll do some chart reviews and dive into some other fun topics as well. Like I said, this morning we had the USA ADP NFP report come out. I'll bring that on over here. That one's done, though. We covered that, so let's dive on down. We talked about weekly oil inventories. Let's check out Frank retail sales. All right, tonight we got an iron condor entering at 11 p.m. for a 7 a.m. expiration. Okay, again, that's entering at 11 p.m. for a 7 a.m. expiration. And we'll be looking for a $30 minimum profit on the dollar Frank. This is based on the Frank retail sales. Usually doesn't move more than 30 pips. So if we can get at least 30 pips around 11 o'clock for a 7 a.m. expiration, we'll buy the lower spread, will sell the upper spread. Now, we also have a straddle. I usually don't put a lot of straggles and straddles on the board, but we got one tonight. We got one on pound manufacturing PMI and the FPC meeting minutes that come out at 4:30, and usually do cause quite a bit of volatility. We'll be looking for a maximum risk on this trade. Again, entering at 11 for around a 7 a.m. expiration. You can enter later as well. But usually I like to enter this trade at 11 o'clock and just set my take profits and let it do its thing. I prefer straddles, which is buying the upper spread and selling the lower spread, the opposite of an iron condor, over strangles, which is buying a binary strike above and selling a binary strike below the market. because those are sort of, all or nothing versus, if it only moves 40 pips and flattens out, I break even. If it moves 45, I make 5. If it moves 35, I only lose 5. It's not all or nothing. But looking at a 40 pip back risk on the trade, and that means that we're looking for to make at least $40 on either side of that trade. Net profit. China, of course, been in bank holiday. Was in bank holiday today. Going to be bank holiday tomorrow. Let's see what else we got going on. Spanish manufacturing, usually not a big deal, but if you're a Euro session trader, you might want to be aware of that. We have a U.S. unemployment claims. We have it every week. Not a big deal, but again, be aware of that in the morning. We got U.S. various reports coming out on Thursday. We got the ISM manufacturing PMI, construction spending, and ISM manufacturing prices. Again, not big movers. Looking for about $30, 30 ticks of movement on the euro dollar. Entering at 9 a.m. for an 11 a.m. expiration on that iron condor. We'll have weekly natural gas inventory. It may work for a straddle, a strangle, or even potentially an iron condor. You got to see what kind of premium is stacked inside that market. And look at your expected ranges. Okay, very important. Expected ranges from entry to expiration. So if you're going to do it at 11 o'clock, if you're going to get at 10, you want a 1 hour expiration, 1 hour expected range. If you're going to enter in at 10 for 12, look at that 2 hour expected range. See what that expected move is. It's the same. Report comes out the same time pretty much every week, except for when there's holidays. So just know that that's happening. And if you trade natural gas, just be aware of it, period, because otherwise you can get run over by a freight train. But beyond that, make sure that you know what the expected move is so you can know the implied volatility, and the pricing makes it a good neutral or breakout trade. We got a U.S. FOMC member speaking on Thursday. Not a big deal, but it is happening, so just be aware of that. But it's not like a massive, major speech. You can go over here, sites like Forex Factory, stuff like that, and we can look at, okay, what is the speech about? Is it a big press conference, or, what is it? And we can go that they're speaking the economic outlook in Salt Lake City. There will be some audience questions expected. And so, of course, obviously, when those questions come out, people are trying to interpret interest rates, and they may hang on every word an FOMC member says in order to see if they think it's going to be, a market-moving event. And if they do, then it'll move the market. Elsewise, usually it's a non-event, whenever it's these small little speeches. We got the yen household spending report coming out tomorrow night at 7:30. Not a consistent market mover. I mean, sometimes big, sometimes not, but one of those that if you are trading tomorrow night, you want to be aware of that release at 7:30. Aussie retail sales is coming out Thursday night, setting us up for another iron condor on the Aussie dollar for a 9 p.m. entry for an 11 p.m. expiration for a $25 minimum profit between the two max profits of the bought lower spread and sold upper spread. We got pound construction PMI coming on out at 4:30, and we're looking for an 11 p.m. entry, a 7 a.m. expiration, and a $35 minimum profit iron condor on the pound dollar. We're going to talk about NFP when we get back, so stay right there.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All righty, folks. Well, I'm back here to the Diagnostic Trading Hour. And so we're just checking out where everything's at right now and what all is going on in the markets that we can, take advantage of. And we're going to dive into NFP now and see what's coming up. So that's the non-farm payroll report coming on out. And I know it's a big move, but often it's not as big as people think it is. And so, but the problem is people think it's big. So therefore, there's a lot of premium, and may work out for a straddle or strangle, but most of the time, I'm just doing iron condors on this too. And I know people think a lot of times that I'm crazy doing iron condors on these trades, but if the premium's there and it's within the expected move as far as the pricing, then not something that you need to worry about. Let's see here. So what can we do? Most of the movement usually happens within the first 15 minutes. So I go for as much time as I can get. A lot of times I'm going for 3 o'clock expirations. The spreads will be wider at 7 a.m. So note I'm referring to the actual spread of the floor and sewing, not to the bid offer. Okay. You can check out. So when I get in at 7, okay, I get these wider bid offer spreads for the 3 o'clock expirations. Okay, so they don't open up until 7 a.m. 10 a.m. If you're going into those trades, usually they'll start out at 8 o'clock. So you either have to wait till 8 or you're going to have to enter at 7. Okay? If you're at 7, you're looking for the 3 p.m. If you're at 8, you're looking for the 10 a.m. in most cases on these trades. So what I got here for you are the currency ranges over the past 2 years. A minimum profit based on the last 12 releases. So I go into this, I pull this up, I look at it, and it really hasn't changed. It's worked really, really well for quite a while for me now. And Aussie dollar usually moves about 60 pips, but then it pulls back. And this is a big thing, is they'll explode and then they'll pull back. And that's where the iron condor works out. So yes, the move is larger than the amount I'm going for, but the pullback is what usually makes it a profitable trade because the move is not big enough in most cases to make it worth doing a straddle. For instance, the Aussie dollar moves 60 pips on average when NFP comes out. Well, if you can get 50 pips in minimum profit on this, that's good. Well, people go, why if it moves 60? Well, okay, so you move out, you're down a little bit, and then the trade pulls back in, say 30, 40 pips, and you end up, having a nice, 30 pip or so profit on the trade. If you went in and let's say it cost 50 pips, okay, it would have to move at least, have to move not only you need to make the other 25, but you need 50, 75, so you got to move 75 pips, okay, before you're even looking at a break-even scenario. And it usually only moves, or 1-to-1 scenario, and it only moves 50. So euro dollar, it usually explodes like 100 pips, but then it pulls back in. So we're looking for 60 pips on that trade. Pound dollar, looking for 70 pips. Okay, that one can move 100, but it can be a little more volatile on the pullback there. So we're usually looking for about 70 pips on it. And dollar CAD, usually 75. We're looking for 60 pips on that trade. When the CAD employment change in employment rate comes out, that one can actually move a little bit more when it comes out at the same time. So I like to look over at this one and check it out and go, are we getting CAD's numbers? No, we're only getting the U.S. numbers on Friday. Sometimes we get the CAD, basically NFP, you could say, at the same time. And but we're not getting that this Friday. Okay, so looking for 60 pips on the dollar CAD. Dollar franc usually moves 92 pips, and so we're looking for 60 on that. And the dollar yen usually moves 80, and we're looking for 60 on that one. You may say, why are some of these 192, 80? We're looking for 60 because that pullback. So I want you to know how far it usually moves when it goes out, but also based on the pullback, I want to get at least this much profit on the trade if I'm going to put my money at risk. And so if you haven't done these yet, feel free to check them out and demo trade them. Demo trade all of them. All right. And you can always go back and look at the show, but demo trade each one of these and put them on. Just learn, don't let your first NFP be a live trade. Demo is a very kind and cheap teacher that can give you very valuable lessons. Live is a very expensive and unforgiving teacher that will give you very expensive lessons. So if it's your first NFP trying this out, I highly recommend you demo trade it. There'll be another one every month. You'll be okay. All right. Straddles. Are there some straddles you can do on this? These are based on the ranges expected minimum profit. So if you can pull off a straddle, and what this expected range is, like 60, 100, 75, 92, 80, etc. And you can pull off a 1-to-1 profit where if it moves that far, then you could actually hit you could make all of your risk plus the risk on the other side, okay? If you could pull that off for 9 a.m., a 10 a.m., a 3 p.m., that's acceptable. Most of the movement happens there in the first 30 minutes, okay? So that can be a better trade in a lot of cases. I have seen times when I've got a 3 p.m. expiration for the same price as a 10 a.m. And just IV was really low, pulled off a great trade. So you can look at straddles on these too. Don't feel like you're locked into iron condors. Look at what the expected move. Look at what the pricing is. If the pricing's really low, you may actually have a great straddle trade. So you got to think on these iron condors. They could always be a straddle or strangle if they're really way too cheap. Make sure that once you get in, especially on a straddle, that once you're in that, you immediately set that take profit, because what it'll do is it'll pop up and then it'll pull back. And if you don't have your take profit there because you're greedy and you want to make all the money in the world, then you're going to give it all away. And you're going to go, why did that trade lose? It moved really far because you didn't take your profit. And then you go up there and it's like, oh, it's up. Okay, if it goes a little further, I'll make some more. And then it goes down here. Oh, if it goes back, and then it never goes back. And then, well, if it gets back to break even, and then it never gets back there. And now all the iron condor traders are very happy and collecting money, and you're losing it because you didn't set your take profit. Very important, if you're trading straddles, that you set your take profit. Also be very aware of deviation levels when you go in to do this as well, okay? If we're going into advanced straddles, now these are a lot more advanced. So once you've mastered the basics of the iron condors and the basics of straddles, if you want to dive a little bit deeper, what's that next club to put in your golf bag? Well, these are advanced straddles, and these are synthetic hedges, synthetic straddles on EuroCAD and PoundCAD. Usually these are the biggest moving pairs. Now, I want to tell you, these are usually the biggest moving pairs when the CAD release comes out. It's not coming out this Friday. But if you want to just practice it, okay, understanding that these probably aren't going to be the best trades for this Friday because we don't have the CAD NFP coming out at the same time as the US NFP. When those both come out at the same time, they're usually a lot more volatile, okay? But if you want to try this out to get it down, then you can come on and look at doing what's called a synthetic FX pair. Well, if you buy the euro dollar and you buy the dollar CAD, okay, you're buying the euro CAD. Did you know that? Okay, if you buy the euro dollar and you buy the dollar CAD, you're buying the euro CAD. Why? Well, if you buy the euro dollar, you're long euro, short dollar. If you buy the dollar CAD, you're long dollar, short CAD. So again, if you buy the euro dollar, you're short dollar. If you buy the dollar CAD, you're long dollar. Well, if you're long dollar and short dollar, the dollars cross out. It's that old algebra formula from 9th grade or 8th grade or, I don't know, 3rd grade, whatever the age they teach kids these days, algebra. A over B times B over C equals A over C. Okay, again, A over B times B over C equals A over C because that B's cross out. So if you buy euro dollar and you buy dollar CAD, you're buying euro CAD. So you can actually trade more pairs on Nadex than you may have known that you could trade by doing these synthetic crosses. And so what you do is you'd buy a euro dollar upper spread and you'd buy a dollar CAD upper spread, putting you in a euro CAD long spread. And then you'd sell the euro dollar lower spread and sell the dollar CAD lower spread, and that would make you in a short euro CAD spread, giving you a euro CAD straddle. Okay? 90% of the time, the biggest move happens in the first 15 minutes. To do this trade, you're going to need to watch. You can look at your P&L of all four contracts combined, but you need to be watching the euro CAD chart. Okay? That euro CAD chart. And usually we get, whenever the CAD announcement comes out at the same time, again, it does it, but this is a cool time to just, play with it, learn about it. When it comes out at the same time, we get a 100 to 150 pip move. So based on this, you can use a 9 o'clock, a 10 o'clock, or a 3 o'clock expiration. You can enter, of course, the 9 o'clock and 3 o'clock between 7 and 8:15. The 10 o'clock you can enter as late as 8. All right. Often the market will remain flat after 11 going into 3 p.m. after NFP and on a Friday. So that can be a great time to do an iron butterfly on Forex, maybe an iron condor, but a lot of times it's going to be hard to get it because the IV's all gone. And so it's easier to get on an iron butterfly, which is where you buy a lower strike, binary strike, and sell an upper binary strike. So a lot of little lessons there on NFP, and hopefully, you'll just play with it, have fun with it, demo trade it till you got it down, till you're really confident in how you're trading it, and from there, you can move on. Let's see what else we got. Okay. Let me see. I'm going to try to change one more thing on one of these charts. I'm just trying to figure out what's going on it. and then I'll put it back up for you. All right. So that gets us caught up on this week's news. Let's go in. Let's dive in. Let's see here for next week and see what we got. Because tomorrow we're not going to focus on the news. We're going to focus on the market. All right. So what do we have coming up this weekend after this next week after MFP? Let's see here. All right. Pound Services PMI news is being released at 4:30 a.m. on Monday. And so we're going to look at an iron condor. So again, we're going to get you caught up through Wednesday right here, the important news trades coming up over the next week. So there's a lot of these iron condors, and you can go way beyond news, by the way. But this is a great way to get started because you have stats stacked in your favor. You can go in. You can try to see if they're acceptable. You know, when you go outside of the news, then you're going to start putting out expected ranges and things like that, and to see if it's a good idea. I love doing them on indices during the day. I love doing them on news on FX. So... but anyways, looking back over at this trade right here, we got pound dollar entering at 11.470 expiration for a minimum profit of $35. All right, so entering at 11.470 M for a minimum profit of $35. Okay, and that's the again on pound dollar iron condor on Sunday. Going on into Monday, we got 9 a.m. to 11 a.m. And we got the U.S. ISM non-manufacturing PMI and labor market conditions. And they're being released at 10 a.m. on Monday. So we're going to do a 9 a.m. entry on the euro dollar for an 11 a.m. expiration. And let's see here. We got expiration at 11 a.m. for a minimum profit of $25. And let's see. Hold on one second. I'm going to bring this up. All right. So minimum profit of $25, 9 a.m. entry for an 11 a.m. expiration, $25. Okay. We go on in. We also have an Aussie trade balance report that night coming out at 8:30 for a 7 p.m. entry. A 9 p.m. expiration for $30 minimum profit. And be aware, Aussie cash rate is coming out, so be very aware of this. Okay, if they do decide to change anything, that can cause some pretty massive impacts, so make sure you're very aware of it. And let's see here. 11 p.m. entry for a 1 a.m. expiration. Minimum profit of $30 on the Aussie dollar. Obviously, normally not a big move. Okay, again, normally not a big move. And that is our trade for the day right there on the Aussie dollar. And let's see, let's go on in. We got a couple of straddles coming up next Tuesday for a 7 a.m. entry and a 3 p.m. expiration. And we'll be looking for a $40 maximum risk. We're going in at 7 a.m. for a 3 p.m. expiration on the U.S. trade balance report. This one usually just sort of moves throughout the day. Okay? Stay right there. We'll be back. We'll wrap up. We got a couple more of these reports, and then we're going to do chart reviews.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Alrighty, folks, well, I'm back here to the Diagnostic Trading Hour. And so this show sort of just went by fast on us getting the news. But tomorrow, like I said, I like to wrap all this up on Wednesday so we can focus on charts on Thursday. We got that U.S. trade balance report. We also have a CAD trade balance report coming out. Usually a pretty good mover. So the U.S. trade balance and CAD trade balance are both usually pretty good movers. U.S. trade balance, again, 7 a.m. for 3 p.m. expiration on euro dollar with a $40 max profit. Make sure you set those take profits. CAD trade balance, 8 a.m. for 10 a.m. A little bit faster moving. One contract right here, 8 a.m., 10 a.m. for a $40 max profit on that trade. And then on Tuesday evening, we have the pound manufacturing PMI. And we'll go in for an 11 p.m. expiration and 7 a.m. 11 p.m. entry for a 7 a.m. expiration. $35 minimum take profit. Report comes out at 4:30. You put it on while you sleep. Of course, you can always use the stop trigger to set your 1-to-1 risk-reward ratio. And then on Wednesday morning, we're going to have the 8 a.m. to 10 a.m. CAD building permits, a neutral market as well, $30 minimum take profit, and one of our favorites, the oil inventory every week. Often looking for strangles or straddles, but if the premium's high, last week it was high. Had a caller or somebody messaged me about it. We talked about it, and it was actually a better iron condor. So just the expense of the straddle made the iron condor just a much better choice. And so make sure you're looking at expected ranges. When you look at premium, see what that break even is, see what that 1-to-1 is on that straddle, make sure it's worth it. If it's not, then you may be a lot better off checking out and doing a neutral trade versus a directional trade. And that right there will catch you up with all the news. We do have a couple other big numbers coming out next week. Later in the week, we'll have the pound official bank rate and their rate statement. Will also have the CAD employment change. So basically, their NFP will be next Friday. I love it when they both line up on the exact same day. This month, it didn't quite happen. Not quite sure what makes that happen, but when it does, it's better. I also like it when the pound interest rate comes out at the same time as the euro interest rate. So what happens usually is the pound rate comes out, then the euro comes out, then the euro press announcement comes out, and it really mutes the pound quite a bit. So makes it for a great back-to-back iron condor with a lot of IV in it. So anyways, but that gets you your current market wrap on all the different markets that are coming up. And let's see what we have. We can look over on a few charts. We're not going to have a lot of time to do a lot of analysis today. Unfortunately, we got the dollar index just sort of floating in between institutional zones right now. So what you got is you got a lot of scalp trades going on, and around those deviation levels. So take advantage of the scalps. That's about all you got. It's a little choppy in its move on up this morning. But if we go over, we back up. It's just, it hadn't been the cleanest trend. So it really has been more of a scalper's paradise today over on the dollar index. If we go on into gold, and a lot of the markets, China's closed this week. That does flatten things out. But gold had a nice, great decline today. It bounced right off of ice, moved on down to one deviation. And it's been sitting there, literally had a trade that fired off early this morning. And not too early, though, early enough that most of you probably could have got it around 8:15. And it literally headed all the way down with just a beautiful, smooth trend. Literally you take the trade down, all the way down to, like I said, the one deviation level before flattening out. And right now we are just bouncing between the -1 deviation. And like I said, just got some scalps, just took a long, closed it long and covered that long, and then it looks like going for a short. Maybe I'm back down, but not much left there in gold for the day. Y'all have a great day. I'll see you tomorrow. Let's do some more chart analysis and talk to you then. Stay tuned. We have another great show coming up for you right after this.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.